Okay, I'm going to get started. My name is Willa Smith. I'm a business advisor here at the Small Business Development Center at Stony Brook, and I welcome you all to this really very important topic and one we haven't talked about in our workshop series for quite some time. So we're really excited to bring this to you. It's a question I get a lot with my clients about sales tax and who has to collect it, who has to pay it, all of that, and really great to have an expert in the field here today. Just a few words about our Small Business Development Center. We offer no-cost counseling services to all stages of entrepreneurship, whether you're starting a business, whether you're growing your business, and I hope you are, or whether you're even planning for the end of your business and you're looking to do succession planning and things like that. We like he says, taking the mystery out of your sales tax, we take the mystery out of starting a business and try to point you in the right direction and help you find the resources that you need to move forward. We have an amazing research network that is based up in Albany, and whatever we need for our clients, we write to them and they send us these amazing custom packages of research. It could be lists of competitors in the area, it could be trends in your industry. It's really a great resource that we wish more people would take advantage of because it doesn't cost anything and it's really a nice thing to have, especially when you're starting a business and trying to figure out your marketing strategy. We do business planning with people. We help them do financial projections for a business that's either new or expanding, and that helps us get you into the banks and look the best you can because you only have one chance to make a first impression with lenders, and we're very knowledgeable about who's giving money out there, and we try to steer you in the direction that is best suited to get you a successful outcome with your loan application. In addition to all of that, we are active in getting people certified, Minority Women Business Enterprise certified through New York State, the federal government. We have an expert on our team who is really awesome. That's Ree Wackett. So if that's something you're interested in doing business with the government entities and selling to the government, we can help you with that as well. We even have a bid links program where we can shoot out bids that are out there in the marketplace that you can bid on every day. And it's another free service that we provide. So we're here to do everything possible to make you successful. We're funded by the Small Business Administration, which is the federal side, and New York State, which is the state side. And we're hosted by institutions like Stony Brook University and all the SUNY schools across the state, as well as privates like Columbia and Pace and Baruch in the city. So we are also able to get access to interns that help our clients. It's really a tremendous resource, and I hope all of you are taking advantage of it. If you have not become a client of the Small Business Development Center, please feel free to reach out to our main line, which is 631-632-9837, and speak to Leslie Rurup, who is actually on this workshop. She is our front desk manager, and she will get you an appointment as soon as possible with someone that can help you. And we stay with people as long as possible. We have launched a lot of businesses. If you follow our social media, you will see that we have a wide range of people out there in the community that we're helping and helping them launch new businesses, buy existing businesses, all of that. So very active in the community and really want to be there for the small businesses that really account for a lot of the employment and economic impact in our area. Today, again, we are pleased to bring to you Mark Stone. He is a CPA, and he has been the managing partner of Sales Tax Defense, LLC, since 2006. The firm specializes in sales and use taxes. Mark's work as a New York State tax auditor, as well as a tax manager and principal at several prominent accounting firms over the past 30 years, has earned him a reputation as one of the top professionals for multi-state sales and use taxes. He is frequently invited by various organizations to speak on sales and use tax issues and serves as an expert witness testifying in tax court on behalf of clients. Mark holds a master's degree in taxation and was also an adjunct tax professor at Long Island University CW Post. His area of the practice that the area of subjects that they do at their practice is, of course, sales and use tax consulting, audit defense, refunds and recovery, complex sales tax planning and research, filing sales and use returns for all 50 states, representation before government revenue agencies and auditors, representation, as I said, as an expert witness, nexus analysis, and advocating for clients at the Bureau of Conciliation and Mediation Services. Wow, we are so fortunate to have him here today, and I hope you all benefit. Please be advised that this workshop is being recorded and hopefully will be available to you afterward to review on our website under the workshop category in our website. So I'm going to turn it over now to Mark Stone. And please, Mark, you wanted questions during or at the end?
During, as we go along, if it clarifies anything.
Okay, very good. So if we see anything pop up, please put them in the chat and we will make sure that Mark sees them and we address them as we go along. Thank you very much, everybody, and welcome, Mark. Take it away.
Thank you, and thank you for having me.
Yep.
Just so you guys know, my background is I started with New York State in 1992 as a New York State sales and use tax auditor, going out to different businesses and asking those businesses basically for money on behalf of New York State. I did that for a few years, left the state, went into the private practice, became a CPA, got a master's in taxation, taught undergraduate and graduate for a little while at CW Post, and started my own practice in about 2006. So doing exclusively sales tax consulting, which is what I've been doing my entire professional career. What I really want to talk about today is I guess a lot of people don't give sales tax a lot of thought. I often call it the stepchild of taxation. Everybody thinks about income taxes. Everybody thinks about April 15th. And, you know, sales tax goes by until the government sends you a bill. And then people unfortunately get very upset, rightfully so. And a very big thing I hear in my practice is, I wish somebody would have told me. If I only would have known, then I would have done things differently. So today is a chance for me to kind of tell you guys differently from the business side. I don't work for the government. Like I said, I'm in practice. I'm a CPA. But really what businesses need to know. And really the starting point of all of that is who needs to file sales tax returns. So, and the answer to that is everybody needs to file sales tax returns. So if you're in business, you should be filing a sales tax return. The same exact way that if you're in business, you should be filing an income tax return. Doesn't matter in income tax, whether you have a profit or not to report, you should really be filing an income tax return. In sales tax, it doesn't matter whether or not you have sales tax to pay over to the government. You should be filing a sales and use tax return. And the reason for that, the reason you file a return, even if you have no money to send to the government or no money is due to the government, is because by filing a return, it starts the statute of limitations running. And the statute of limitations is the amount of time that the government has to come back to you and say that you have and send you a bill for doing something wrong. So as long as the mistake that you made is not intentional, is not fraudulent, is not criminal, the government gets 3 years from when you file a return to come back to you and say that you owe more money. So if you make a mistake, if you forget to charge sales tax, if you get bad advice, if you get no advice, as long as you're not intentionally doing it wrong, then the government will have 3 years if you file a return. If you don't file a return, the government has an unlimited period of time to come back to you and say that you made a mistake. And unfortunately, whenever you owe the government money, whether you owe the government money for income tax, for sales tax, for payroll tax, if you owe them back taxes, they charge you both interest and penalties on top of those back taxes. both interest and penalties are calculated partially based upon the amount of time that's outstanding that you owe them government. So obviously, if you take out a loan, the amount of interest from 6 years ago is going to be much more than the interest from 2 years ago. So if you owe the government taxes from 6 years ago, the amount that you owe them is going to be dramatically higher than if it was just 2 years ago. So one of the single best things that you can do for sales tax is to file returns, because that starts the statute of limitations running. And you need to file a return in any jurisdiction, in any state where you either have a physical presence, where you're actually there doing business, you have inventory, you have employees, you have an office, you have equipment, or if you do more than $100,000 of business delivered into that state. If you do either of those things, then you need to file in that state. And so how do you file? Well, the first step is registering for sales tax. The way you register for sales tax is you go to the New York State Department of Taxation and Finance's website, and you find the section. It's, pretty easy to type in at Google, New York State Tax Department, and type in sales tax registration. If you type in sales tax registration at their website, it will take you to the section there where you go ahead and you do your registration, and you put in the company name, you put in the address, you put in the federal ID number, you put in the officer information. You're going to need to put in banking information. So the basics. And the reason for that is they're going to give you a certificate of authority. The certificate of authority now means you're registered for sales tax. It means you need to file quarterly sales tax returns. And it means you have permission to collect sales tax in New York State. So that's really the basic startup. And by giving them this information, which is required, sales tax is a fiduciary responsibility. That means that if the business does something wrong and the business is unable to pay the taxes that it owes from doing something wrong, that they can come after you personally for it. So that's the reason they make you put in your personal information if they're going to give you permission to collect sales tax. So that way, if something goes wrong, they know who to come to and say, time to pay up. So that's also why you want to be careful with it. Because if you don't do sales tax right, if you don't register when you're supposed to register, if you don't keep the right records to prove that you don't owe them sales tax, the presumption is that you do owe them sales tax. And then they can send you a bill. They send your company a bill. They send that bill with interest and penalties. If your company doesn't pay it, they send that bill to you personally, and then they can come after you. They can put a lien on your house. They can levy your bank account, and they can seize your car and sell it at auction. And the state does all of these things. So that's why it's so important to kind of get it set up the right way from the beginning and do it the right way. So you have to register. Part of getting set up the right way is keeping books and records. 20, 30 years ago, the way to keep books and records was to go to Staples and buy lots of green paper and set up lots of columns and do lots of accounting. And that's how I learned to do accounting. Things, of course, have changed since I graduated from college in the 90s. And now we have computers, and we have computers that can help us keep books and records. And not a paid endorsement, and not the only program that's on the market, but one of the easiest programs on the market is QuickBooks Online. And I recommend that everybody gets some type of software program that allows them to keep their books and records. And what QuickBooks Online does, much like many other accounting programs, is since it's online, it's in the cloud, it backs it up for you automatically. So if you spill your coffee on your computer, then just because your computer is shorted out, you don't lose all your information because it's in the cloud. And really what QuickBooks Online is, like many accounting programs, are glorified check registers, which means you enter a check. When you write a check, you tell the computer to whom your money is going, and you tell them why. And when I say why, you code it to an account. So you write a check to the electric company, you code it as utilities, and then it keeps track of it. When you get money in, same kind of thing. You wrote an invoice, you sent it to the customer. You do that through QuickBooks. The customer pays you. QuickBooks, you check off that you received the money. And now that it knows you have sales revenue, and at the end of the month or the end of the quarter, you can run a report, that you use to prepare your sales tax return, so that for the quarter you had $100,000 in sales, you collected $8,000 in sales tax, and then you can send that information to New York State. I'm going to assume, since this is Stony Brook, that all of us, or almost all of us, are located here on Long Island in New York State. As I'm sure everybody is aware, New York State has many, many counties: Suffolk County, Nassau County, Queens, Brooklyn, and then as you go upstate, Westchester, Rockland, and so on, so on, so on. In New York, most counties have their own sales tax rate. So you need to keep track of your sales tax by county. Currently, Nassau and Suffolk County have the same sales tax rate, which is 8 5/8% sales tax. New York City, which is the 5 boroughs of the 5 counties of New York City, have a higher sales tax rate, 8 7/8%, or 8.875%. With the election in November, Suffolk County passed a bond initiative to do something with the water. And I believe in March, our sales tax rates will be going up 1/8% in Suffolk County. So be aware of that's coming, so that Nassau and Suffolk will no longer have the same sales tax rate. So Suffolk should be going to 8.75%, I believe, on March 1st. So watch out for that. So once you're registered, you start collecting sales tax. Now, from whom should you collect sales tax? Your default should be that you collect sales tax from everyone. So if you don't want to collect sales tax from everyone, you need to either understand that your business is non-taxable. I'm an accountant. Accountants, like most professionals in New York State, do not need to charge sales tax on their services. You don't pay sales tax to your accountant, to your lawyer, to your engineer, to your doctor. Those professional services are all exempt from sales tax. Or your customer gives you some type of documentation that I'll talk about a little bit more, that they are exempt from paying sales tax because New York State says that they're special in some way, shape, or form. Maybe your customer is Stony Brook University. Stony Brook University is basically owned by the state of New York. New York says it does not pay sales tax to itself. So when you do work for the government, if you normally would charge sales tax, then you don't need to charge that customer sales tax. But it is your obligation as the seller to keep the proof that you're doing business with Stony Brook University, not an individual. So if you run a cleaning service, and cleaning services are subject to sales tax in New York State, and you're cleaning the classrooms or the dormitories at Stony Brook University, and Stony Brook University is hiring you and paying you, you don't need to charge them sales tax. However, if Willa hires you to clean her house just because Willa works at Stony Brook, that doesn't make this transaction with Willa exempt from sales tax, because Willa is not the government. Willa is an individual. So you have to understand the distinction of who your customer is if your customer is going to claim that they're exempt from sales tax. So the big takeaways from this is that really everyone should register. Everyone needs to keep books and records if they're in business. Everybody needs to file returns. New York State sales and use tax returns are generally filed quarterly. The New York State quarters start March 1st. So the first quarter is March, April, May. They give you 20 days to file the return. So March, April, May is due June 20th. June, July, August is due September 20th. September, October, November is due December 20th. And December, January, February is due March 20th. Those are the New York State sales tax quarters. New York State decided to make up its own quarters. It's the only state in the country that doesn't know how to follow the calendar because New York State is special. So just be aware of that. And if you file a return late and you owe them money, the penalty for filing that return 1 day late is 10% of the tax due. So if you owe them $5,000 on your sales tax return, the fact that you're filing it 1 day late on March 21st, you now owe them $5,500 just because you filed it 1 day late, and the penalties only go up from there. So really very important that you file your returns. And if you don't owe them any money because you didn't do any business or you didn't have any taxable business, you need to file a 0 return and say, I don't owe you any money. Because if you don't do that, New York State is going to assume that you do owe them money and send you a bill that they make up, that they feel that you owe this amount of money just for the pleasure of being in our great state. So please make sure that you file a return regardless of whether or not you owe them money. And you file those returns online through the same New York State Tax Department website, through the same online account that you'll have set up when you did your sales tax registration. So, keep books and records, collect the tax from your customer. When you collect tax from your customer, make sure that you separately state sales tax on your bill, on your invoice, on your contract, on whatever piece of paper you give to your customer. New York State does not allow you to say tax included when you give a receipt. So please be aware of that. Always have sales tax as a separate line item. And of course, as I said, please keep books and records. So when the government says to you, how did you come up with these numbers? You can tell them how you made them, how you came up with them, and that you did not just make the numbers up. Very important. Anybody have any questions so far?
I don't see any marks, so we
Nope,
can
so
keep going.
far, no.
Okay. What should you be charging sales tax on? In New York State, most sales of tangible personal property is basically anything that you can hold, a mouse, a coffee cup, a phone, a highlighter, anything is tangible personal property that's not permanently attached to the earth, like the building. A desk is tangible personal property. It's movable if you're strong enough. A car is tangible personal property. If you can move it, if 4 of you are strong enough. A plane is tangible personal property if 400 of you are strong enough to pick it up, or whatever you need to lift up a plane. So it's not attached to the earth. So in general, the default is that the sale of tangible personal property in New York is subject to sales tax. In addition to that, New York State says that specific enumerated services are also subject to sales tax. Enumerated services like utilities, telephone services, the sale of canned software. Canned software is a copy of software that more than one person in the world has. That includes cloud-based software and SaaS services, software as a service. All of that is considered software in New York State. All of that is subject to sales tax. A very big thing is repair and maintenance charges. Repair and maintenance charges are also subject to sales tax. Whether that repair is having the brakes changed on your car, having your house repainted, having your house cleaned, those are all repair and maintenance services. In addition to that, guard services, protective services are also subject to sales tax in New York State, as well as what New York State calls information services. Information services is anytime you get information from a common database. Probably most people on this call have seen a copy of their credit report. That credit report that you get when you look at it is the same credit report that I would get if I pulled your credit report, because the information comes from a common database. In New York State, the charge for a credit report is subject to sales tax because that's considered an information service. So that's the type of things that New York State is looking out for. So know what is and what is not subject to sales tax. Very important. A couple of things I left out. Printing is subject to sales tax. Storage and parking is subject to sales tax. Limousine services are now subject to sales tax. So be aware of all that. In addition to that, statewide, specifically in the 5 boroughs of New York City, they have extra sales tax on some things. The extra sales tax they have in New York City is on what they call personal services. Personal services in New York City are things that either make you look good or feel good. Specifically, things like haircuts, massage services, nail salons, weight loss clinics. All of those things are subject to sales tax only in New York City, not anywhere else in New York State. And they're only subject to sales tax at roughly 50% of the standard sales tax rate. So please be aware of that. To spend a little bit more time talking about real property versus tangible personal property, New York State says that real property, you buy a house, is not subject to sales tax. New York State says that tangible personal property is subject to sales tax. You buy a car, you do pay sales tax when you buy a car. However, you may already own a house and you may hire a contractor to come do work for you. And New York State tries to make a distinction between adding to the real property and maintaining the real property, where adding to the real property is not subject to sales tax, and New York State calls that a capital improvement, whereas maintaining the real property, which New York State calls repairs and maintenance, is subject to sales tax. So if anyone here is a contractor, when you do capital improvement work adds to the value of the property, is not removable from the property, and it's the intention of the property owner for that to be a permanent installation. So you're adding or maybe prolonging the useful life. It's attached in such a way that the removal of the item is not possible without causing damage to either the item or the property, and it's the intent that it's permanent, that qualifies as a capital improvement. And what has to happen there is that the property owner, your customer, has to give you a form ST, sales tax, ST dash 124. And what that does is a certification from the property owner, from the customer, that the contractor should not charge them any sales tax, not on the labor and not on the materials. New York State says that job done by the contractor is effectively the sale of more real property and not subject to sales tax. Things that are very common capital improvements would be gutting and replacing your kitchen, adding an extension onto your house, putting a new roof on your house, replacing all of the windows in your house. All of those things are very common capital improvements. Things that are not capital improvements, things that are repair and maintenance, would be repainting your house, weekly landscaping, weekly pool services, having a plumber come to your house and fix a leaky pipe, having an electrician come to your house and replace a circuit breaker that's shorted out. All of those things are simply restoring the property to its original working condition. When you restore the property to its original working condition, that's repair and maintenance services and subject to sales tax. When you make the property better, when you make the property bigger, when you do something that makes the property more usable or usable for a longer period of time. A new roof is a great example of that. That, you have a roof on your house for 30 years and you have it patched because it's leaking, that's a repair. At some point, you need to have that roof ripped off and a new roof put on your house. That new roof hopefully should last another 30 years. So that's prolonging the useful life of the house, because if you leave the old roof on there, eventually it's going to collapse and you're not going to be able to use the house anymore. So that kind of the distinction that New York State is looking for. And as the contractor, your obligation is either to charge sales tax on every dollar that you get from the customer, or to get an ST 124 where the customer is representing to you that is a capital improvement. And as the contractor, if the government ever asks you why you didn't charge sales tax, you're going to simply say the customer gave me an ST 124. I like to say in the office that you either get the tax or a piece of paper. Those are very big things to be aware of. Um, if it is a capital improvement, you as the contractor need to pay sales tax when you buy all the materials. So if you're a roofing contractor putting a new roof on someone's house, you need to pay sales tax when you buy the roof shingles, when you buy the nails to put on the roof. And of course, any contractor always pays sales tax on their tools, on a hammer, on a bulldozer, on a pickup truck. They always pay sales tax in those things. The alternative is that you're doing a repair and maintenance job. When you do a repair and maintenance job, you charge the customer sales tax on both the labor and materials. However, since the government is now getting the sales tax on everything, assuming that you have properly paid the sales tax when you bought the materials, New York State gives you a credit or an offset for the sales tax that you paid on your purchase of the materials against the sales tax that you charged your customer when you sold them that repair and maintenance job. So either it's on the revenue side, repair and maintenance, or it's on the purchase side when you do a capital improvement. It's probably the most common thing that I've seen done wrong in New York State is that contractors just say, I don't have to charge tax, and they don't worry about it. And I deal with many contractors that owe New York State many hundreds of thousands of dollars because they didn't follow the rules. They were advised improperly. They didn't keep the right records. They didn't pay sales tax when they bought materials that they used in building homes or renovating homes. So really be careful of that. That's probably the most common thing that goes wrong. The other very big exemption in New York State is the resale exemption. What the resale exemption is, it means that you're buying something and that you're reselling it. The most common resale exemption is for inventory. And if you think about Target, the shopping store, the store, Target has an entire, 10,000, 50,000 square feet of inventory, literally sitting there waiting for you to come and buy it. So when you walk into Target and you buy anything, coffee cup, pencils, clothing, Target charges you sales tax. However, when Target goes out and buys the clothing from whomever, Levi Strauss, when they buy a pocketbook from M&K, when they buy pencils from whoever makes pencils, when they buy bicycles from Huffy, whoever it might be, when they buy tools from Stanley, they do not have to pay sales tax on those items because they're going to likely charge sales tax when they sell those items. The way they document to their supplier that they don't have to pay sales tax when they buy these items is by giving their supplier a resale certificate. The resale certificate, form ST 120, is the documentation that the supplier gets when they don't want to have to charge their customer sales tax. Contractors get capital improvement certificates, ST 124s. Vendors, suppliers, people that sell tangible personal property get ST 120s. And it does make a difference to New York State because if you get the wrong certificate, they won't honor it when they look at your records. So please be careful about that. There are some things in New York State that are not subject to sales tax. Food is a very common item, but only specific food is not subject to sales tax. The specific food that's not subject to sales tax is what they call necessities, not luxuries. So only food that you buy from a supermarket or in a supermarket state is not subject to sales tax. And generally, it's only healthy food or what New York State deems to be healthy, as opposed to things that New York State deems not to be healthy. So examples of supermarket food that's not subject to sales tax is food that you buy from the deli counter that they sell by weight, quantity, or volume, as opposed to catering, because catering is taxable. When you buy fruits and vegetables, when you buy frozen foods, and when you buy bakery items, all of those things are not subject to sales tax. So even things like cookies are considered bakery item and therefore not subject to sales tax. In addition to that, milk and juices, things that are more than 70% juice, are also not subject to sales tax. However, things that New York State say are luxury items or things that are maybe not healthy for you, things like bottled water. Bottled water is taxable because New York State says drink your water out of the faucet. Soda is, or, fruit punches and Gatorade and things like that are all luxury items, are all subject to sales tax. Candy is subject to sales tax. And most importantly, prepared food or anything that's sold hot is subject to sales tax. So anytime that you go to a restaurant, that's going to be subject to sales tax. Anytime that you buy something from a deli that they make for you on the spot, an egg sandwich, a regular roast beef sandwich, a hot cup of coffee, that's all taxable. Those are all luxury items. New York State says that if you don't want to pay sales tax on your coffee, go buy a pound of coffee grinds and buy yourself a coffee pot and make your own coffee. That's not subject to sales tax. If you can afford to walk into a deli, if you can afford to walk into 7-Eleven, if you can afford to walk into Starbucks and have them make a cup of coffee for you, that's a luxury item. And as a luxury item, you need to pay sales tax on that food. If you walk into a restaurant, that's a luxury item. Even if the restaurant is McDonald's or Burger King, it's subject to sales tax. If you don't want to pay sales tax on your hamburger, go to the supermarket, buy a pound of chopped meat, buy half a dozen rolls, make your own hamburger at home, cook it, put it on your own roll. That's not subject to sales tax. That's the distinction that New York State tries to make in taxing food versus not taxing food. Another thing that's not subject to sales tax is medicine. Medicine designed for human beings that alleviates some type of medical ailment is not taxable. And it doesn't necessarily have to be prescription medicine. It can be non-prescription medicine like Advil or Tylenol. Advil and Tylenol are for when you have a medical ailment. You have a headache. You have a spouse or an ex-spouse that's nagging you, and so therefore you need aspirin or whatever it might be. Nobody smiled. So that medicine and medical devices, when purchased by the patient, are not subject to sales tax. When a medical provider buys medical devices, they are subject to sales tax. Clothing. I had just said before, clothing is subject to sales tax, and here I have it listed as clothing is not subject to sales tax. Clothing under $110 per article is not subject to the New York State sales tax rate, but each individual county gets its own right to tax clothing. It's my understanding, if I have this right, Suffolk County does tax all clothing. Nassau County follows New York State and does not tax clothing. New York City does not tax clothing. So depending on where you're buying clothing in New York State, it might be subject to roughly a 4% tax or the full or 0% tax or the 8% tax, depending on what county it is and how much the clothing is. Again, any clothing over $110 per article is subject to sales tax. So if you buy a suit for $120 or a pair of shoes for $120, that's entirely subject to sales tax because that's deemed to be one article. If you buy a pair of pants for $60 and a sport jacket for $60 and they're sold separately, they could be exempt from sales tax because each article is under $110. So be aware of that. It gets a little confusing.
Oh, excuse me, Mark, could we
Yes.
break here? We've got a couple of questions.
Sure, let's
Okay, going all the way back, someone was asking, let's see, about a particular, oh, do you recommend any other bookkeeping systems, or is QuickBooks one of the better options?
I recommend something that's computerized and something that's backed up online because computers fail. QuickBooks is probably the most common and best known piece of software. It's about $75 a month or so to get started, so it's relatively affordable. But this is not a specific recommendation for QuickBooks. I would tell anybody that's getting started to talk to their accountant about what their accountant recommends. And very easy, again, go to Google and type in QuickBooks competitors. It'll probably give you at least half a dozen other companies that do exactly the same thing that QuickBooks does, probably for a little bit less money. They're just not quite as well known.
Thank you. The other one is a Sunset Boat Tour business subject to sales tax in Nassau County?
So assuming it's strictly just a tour for sightseeing, it is not subject to sales tax. However, New York State has this concept called bundling, where you sell a taxable and a non-taxable item. And the classic example of that is Hickory Farms at Christmas time, where they sell a cheese board with cheese. In New York State, generally cheese is not subject to sales tax. It's generally considered food. Generally in New York State, a cheese board is a piece of wood. A piece of wood is subject to sales tax in New York State as tangible personal property. When Hickory Farm sells a cheese board at Christmas time with cheese for whatever they sell it for, $49.95, the entire transaction is subject to sales tax because New York State says that they're not going to get into whether or not the cheese was $20 and the cheese board was $30, or the cheese board was $10 and the cheese was $40. You're selling it as a bundle, you get the worst tax treatment of everything in the bundle. If you're doing a tour and as part of the tour, you're including food and alcohol or food and beverage sales with it. So you get to go on a tour around Nassau County out in the water or whatever it might be for $99. And it includes, like I said, the food. Well, now that's considered the sale of prepared food. That's the sale of catering. That's the sale of restaurant food. That's the sale of taxable beverages. That's all taxable. New York State's not going to say the food is $30 and the tour is $70. They're going to say the entire tour is taxable. So it depends how you sell it. But a plain vanilla tour with nothing else bundled with it is not subject to sales tax anywhere in New York State.
And Willa has a great one. How is online clothing or online sales across counties and states treated for sales tax?
It's treated the same exact way that in-person sales are treated. Online sales are just another medium or method of making sales. In New York State, sales tax, and in every state, sales tax is based upon the point of delivery, where the customer actually gets the goods and services or receives the benefit of the goods and services if there's nothing tangible to receive. For example, information services, you get your credit report. You're not going to physically get something anymore. They're probably going to email you a file or open a portal where you can download something. Wherever you are physically at when you download it is the point of delivery, is the jurisdiction, is the county that is going to be subject to tax. So if you're shipping things out of state, they're not going to be subject to New York State. But if you're shipping things into New Jersey, And again, if you have nexus, if you have connection with New Jersey from either having a physical presence in New Jersey or doing more than $100,000 of business in New Jersey, you have to follow the New Jersey rules and figure out whether or not the item that you're now delivering into New Jersey is subject to sales tax. And if so, charge the New Jersey sales tax rate, not the New York sales tax rate. And of course, you would need to register with New Jersey, file New Jersey sales tax returns, and remit sales tax to New Jersey. So online sales have the potential to make you be required to file in many, many, many more jurisdictions than just where you're located. So watch out for that.
Okay, we have them pouring in, but if it's something you're going to answer later, just let me know. Michelle would like to know, would advertising in a magazine, print and digital, be taxable? And would tickets to an event be taxable?
So in New York State, advertising is not subject to sales tax. And then with regards to tickets to an event, it depends on the type of event. Specific live or dramatic performances, musical shows are not subject to sales tax, but admission to places of amusement and sporting events are subject to sales tax. So if you go and see the Mets play, the Mets do have to charge you sales tax. If you go to Citi Field and see a concert, the concert is not subject to sales tax. If you go to Carnegie Hall to hear the symphony, they do not charge you sales tax. If you go and go to, say, the pumpkin thing at Halloween where you walk around and see all the jack-o'-lanterns, that's admission to a place of amusement. That is subject to sales tax. So it depends what the ticket is for.
All right, that seems to be everyone. So for right now, thank you.
You're welcome. Okay. So I keep saying sales and use tax, and I haven't said what use tax is. So everyone is familiar with the term. I'm going to assume everyone is familiar with the term sales tax. When you walk into a store and they charge you tax, really what we're saying is they charge you sales tax. So people used to go online and be like, if I buy something out of state, I don't have to pay the sales tax because they don't charge it to me. The law has always been that if you're supposed to pay sales tax on that item, whatever that item is, and for whatever reason, you're not charged the sales tax, it's out of state, you paid cash, the person who sold it to you didn't know that they were supposed to charge you sales tax, you erroneously gave them an exemption certificate so that they didn't charge you sales tax. Whatever reason is that they didn't charge you sales tax, but you should have paid the sales tax, you owe that tax directly to the government. And when you owe it directly to the government, it's called use tax. And when you file your return on a quarterly basis, it's called a sales and use tax return. And the way the return actually works is it has a column for taxable sales. It has a second column for purchases subject to use tax. And in that column, if you bought something that you should have paid sales tax on, but did not pay sales tax on, you need to list it, list the dollar amount. You add your taxable sales together with your purchases subject to use tax, and then you multiply it by the tax rate in the county where the sale was either delivered or where the item was used, and that gives you the amount of tax that you owe the government. So New York State says that you don't avoid the tax by not paying it, by someone not charging it to you, by buying it out of state and bringing it back into New York, by accidentally giving the wrong exemption certificate. So all of those things you have to really watch out for and be aware of, that you don't beat them by not paying it. Of course, the enforcement of use tax is a little bit more lax. But if they audit you, they only audit about 3% of the businesses every year. But if they audit you, they will also audit to make sure that not only did you charge the right amount of sales tax, but that you've also paid the right amount of use tax on anything that you bought. So be aware of that, please. Believe it or not, sometimes you're entitled to a sales tax refund if you've overpaid sales tax to your vendors, or if you erroneously self-assessed use tax on items um, that you should not have paid use tax on. And if so, you get that money back. Where that comes from is things like you bought items that you didn't know qualified as inventory and then you resold them, or you're a contractor that you paid sales tax on materials that you use in a repair and maintenance job, or a very common thing is if you're a manufacturer. Um, a lot of businesses don't know that manufacturers don't have to pay sales tax on their machinery, on repairs to their machinery, on tools, or the utilities that they use to run the machinery. So a lot of manufacturers are entitled to sales tax refunds because the utility companies, the gas company, the electric company, go ahead and just charge them sales tax and they pay it. But actually, all of the utilities that were running the machines that were making their products, all of the machines that were using gas to melt things, heat things, weld things, is all exempt from sales tax. So you're entitled to get that money back directly from the government. You just have to file a refund claim. You file a refund claim with Form AU 11 is the form number, AU 11. You file it, you have to document why you're entitled to the refund. You have to document that you actually paid the tax by attaching the invoices and the checks or the bank statements to prove that you paid those invoices. And then New York State sends you a refund check about 90 days later. So it's actually not very complicated. Um, the largest refund that we ever got for one of our clients was $2 million. So, there are some very substantial refunds that are out there. And I've gotten refunds for clients as small as $3,000 or $4,000. So it affects really every business, but it is absolutely an opportunity to get some money back for your company. It's also an opportunity to prospectively lower your costs, because if you were paying tax on your utilities and you're not supposed to be, by eliminating that tax, you can save 8 or 9% of your utility cost, which unfortunately is not insignificant on Long Island because utilities are expensive. We talked about online, that you have to watch out for nexus, that again, you get nexus from physically being in a state, going into a state, having a traveling salesperson go into a state, having a repairman go into a state, having an installer go into a state, having a remote employee work in that state. All of those different things create nexus, create the obligation for you to file those sales tax returns. In addition, you can have economic nexus in a state. That's as a result of the 2018 Supreme Court case of Wayfair. That's normally known as the Wayfair decision, which created the concept of economic nexus, or approved the concept of economic nexus, that if you do basically more than $100,000 of sales into a state in a year, it's the same thing as if you're physically there and you have to file sales tax returns. What I want everybody to note at this point, a lot of people make jokes about the government being dumb, not knowing what they're doing, not being able to track anything. Give all of the state governments, give the IRS enough credit that they can buy good computers. And companies like IBM and other supercomputer companies make very, very good computers. And that their very, very good computers are capable of subtracting two numbers and seeing if there's a difference. So if you file 4 quarterly sales tax returns, each quarterly sales tax return shows $100,000 of gross revenue, it would make sense that you have $400,000 of annual sales. When you file your income tax return and report $1 million of sales on your income tax return, please give the government enough credit that they can buy a computer that takes your income tax reporting $1 million, subtracts your sales tax reporting $400,000, sees that there's a $600,000 difference, and sends you a notice that you either owe sales tax on the $600,000 or explain to us why your numbers are different when they should add up to be basically the same numbers. So watch out for that. And by using some type of bookkeeping system, some type of bookkeeping program, when you run those reports, things should theoretically add up to the right numbers, because 4 quarters should get you the whole. And if you're doing it on paper, sometimes things get missed. So please be careful of that. That's why I'm such a big believer in using some type of software program to do your accounting package, to do your accounting work, to do your bookkeeping, to keep track of things. Again, if you have nexus in a state, you need to file, you need to register, you need to remit sales tax, you need to keep records, you need to keep exemption documentation from your customer if your customer doesn't want to pay you sales tax. One of the worst things that I've heard is, I don't have to worry about sales tax because my competitors don't do sales tax. Just because your competitors don't do sales tax doesn't mean that's what the law is in New York State. Please talk to your accountant. Please talk to your lawyer. Please talk to a paid professional who gives you that advice in writing. Any professional who doesn't give you advice in writing is giving you something that's worthless. That holds true as well for the government. If you call the government at 1-800-CALL-TAX or whatever their phone number is and say, what do I do? And Bob on the phone with the government tells you that you have to do this, unless they send you an email, unless they send you a fax, unless they send you a letter, unless they can point you to a memorandum or some type of written guidance, verbal advice is worthless. You must get it in writing. You won't forget what they say if you get it in writing. You won't misunderstand what they say if you get it in writing. And if the advice they give you is wrong and you rely on it and you end up owing substantial monies, honestly, you'll have a malpractice claim against them to recover your damages from following their advice. So really, please get it in writing. If it's not in writing, you didn't get advice. Your actual filing frequency in each state depends on how much money you owe them. The default in New York State is quarterly, but for people that owe very little money, I believe it's less than $3,000 a year, New York State will eventually let those people file annually. And in New York State, if you owe more than roughly $30,000 a quarter, then you have to file monthly. And depending on how much money it is, you might have to not just file monthly, but you might have to file and pay electronically on a monthly basis. So please be aware that if you have a company that owes substantial taxes, and that's true whether it's sales tax, payroll tax, income tax, you may have to make more frequent payments to the government, and you might even need to make those payments electronically. If you don't do it the way they want to do it, they charge you penalties. That's their answer for everything. If you don't do it the way they want you to do it, they charge you penalties, or penalties and interest. So please be aware of that. Most returns are filed either electronically through some type of EDI upload, or through the state website, where you either type in the return or upload the data directly to their website. Very few returns now are filed by paper. The government doesn't want to have to type in your returns because you've been too lazy to do it yourself. They want you to upload it. No more mailing them returns is kind of the general rule. If you, or when your company gets selected for audit, and it might not be a sales tax audit, it might be an income tax audit, it might be a payroll tax audit, it might be a workers' comp audit, it might be an unemployment insurance audit, all sorts of taxes, all sorts of audits, 50 different states that can audit you on top of the IRS auditing you. You should determine who's going to represent you before you talk to the auditor. You should make sure that you have books and records for the audit period. Before you meet with the auditor or give the auditor any information, you need to have an audit plan that includes determining what your exposure is and how you're going to try to mitigate that exposure and what you're going to do about it. You need to make sure that you know who the responsible persons are, because if the company is not able to pay the tax, somebody's getting a bill, somebody's getting a lien on their house, somebody might be getting their car towed and sold. So you need to know from the beginning how all of this is going to be addressed, because the time to address it is not at the end when the auditor hands you a bill for $300,000 because you haven't been filing and paying your sales tax for the last 6 years. So they audited you for the last 6 years because there was no statute of limitations. So a little bit of planning can go a long way in saving a company an awful lot of money. At the end of the audit, as I said, the government always charges interest and penalties if you did something wrong. There are cases that penalties can be waived. There are cases where interest can be reduced. You should always argue for that at the end of an audit. Obviously, you have better reason if your business burned down, if you relied upon written advice from a professional, if there was an ongoing court case disputing the tax, that there was no resolution to at the time that you did something. Those are all good reasons to get it wrong. Not knowing is not a good reason. Not having the money to pay the tax is not a good reason. Because your neighbor Bob told you that you don't have to worry about the tax is not a good reason for.
Are you looking for
What's that? So, so again, try to get penalties waived if they're imposed, but otherwise, be careful because there are substantial penalties. At the end of an audit, if you owe the government money, you need to resolve it. Or at the end of when you get a bill, you need to resolve it. You can set up a payment plan where you pay the government up to 3 years, generally is what they give you. You can file something called an offer in compromise, where you say to them, I owe you $300,000. You're charging me 18% interest a year, which is roughly $60,000 a year just in interest. I only make $40,000 a year. So mathematically, there is no possible way that I'll ever pay off this assessment. So how about we reach a settlement where I'll pay you something, but not the whole $300,000 because you're just never going to get it. So that's an offer in compromise. Or maybe there's some other ways that you just, wait. You can try to outlast an assessment. IRS has 10 years to chase you. New York State has 20 years to chase you. You can move to a state maybe that doesn't deal with New York, although most states have some sort of reciprocal agreement. You can flee the country if it's worth fleeing the country over sales tax. I think that's a little extreme, but New York State is not going to chase you if you go to, the south of France and live in the south of France making wine instead of paying sales tax in New York. Maybe that's not a terrible idea. But the government does have somewhat long arms. They can suspend your driver's license. If you owe the IRS money, they don't want to let you get away. They'll suspend your passport so you can't get out of the country. So, be aware of these things, that the government really does chase you. If you get a bill from New York State and you think the bill is wrong, there are lots and lots of protests between going to what was mentioned at the very beginning, going to the Bureau of Conciliation and Mediation Services, BCMS. The IRS calls it appeals. If you're not happy with the answer that you get from appeals, you have the right to go to tax court. In New York State, there's 3 levels of tax court that you can go to. I represent people at 2 of those 3 levels as a licensed CPA. If you're going to go to the 3rd level, which is the highest level, which is called an Article 78 hearing, you need a licensed attorney to do that. Very similar on the IRS side. You can go to tax court. You have a attorney take you to tax court. You can appeal it all the way up to the Supreme Court eventually. Very few cases get to the Supreme Court, but they do hear 3 or 4 tax cases a year. So you have lots of recourse, but you always have to exercise your protest rights in a timely manner. That's somewhere between 30 and 90 days, depending on the jurisdiction. If you miss it by 1 day, you don't ever get those protest rights back. It's a done deal. You owe the money and you're out of luck. So really watch the timing of that. New York State is 90 days. And if you need guidance in New York State, you can request what's called an advisory opinion to get something in writing. You can call them. Again, verbal advice is not binding and I wouldn't rely on it. But if you spoke to your accountant, he told you something, you spoke to your lawyer, he gave you a memo on it, which is the same thing as your accountant told you, and you called New York State and they told you the same thing as the other two people, it's probably the right advice. Probably. So you could call them. And of course, you can go to their website and look for written guidance between the publications, the advisory opinions, the memorandums. You know, there is definitely written advice to be gotten. This is my contact information. If you guys have follow-up questions after this or need to reach me in the future, this is my team that works for me. So does anybody else have any follow-up questions?
Oh, yes, we do.
Okay.
All right, Christina asks, if we use an online marketplace like Etsy that collects the taxes, do we still need to register for a sales tax license since we aren't actually submitting any money?
Yes, you need to register, file, report your gross revenue, and then the revenue that Etsy pays the tax on, you report as non-taxable revenue. But yes, you still need to file.
And Rinaldi asks, being a photographer, if he does a shoot in Suffolk County, then travels to a different county like New York City, is he subject to two different types of taxes? Or if he goes to another state, he's assuming that he'll be charging the tax for that state. And he's also curious if it would be the same for an interior designer.
So interior decorating and designers are subject to sales tax in New York State, except in the 5 boroughs of New York City. So it's roughly 8% tax everywhere in the state if you're an interior decorator and designer, but only roughly 4.5% tax if you're in New York City. As far as photographers go, the professional service of being a photographer is not subject to sales tax. So there's no sales tax on taking pictures of anyone in Nassau, Suffolk, New York City, anywhere in New York State. What is subject to sales tax is the sale of tangible personal property. So if you're a photographer and you charge someone $5,000 to take pictures of their wedding, and then you create a portal that they can go to and they can electronically download those pictures or those images or those data files, that is not subject to sales tax. And if they can take those images and go to CVS and print out the photos, they only owe sales tax to CVS on the photos they print out. If you're a photographer, you charge someone $5,000 for a wedding and you hand them a USB drive at the end of your process that has all the files on it, that USB drive is a $5,000 sale of tangible personal property subject to sales tax based upon the point of delivery of where the customer gets that USB drive.
Kimberly asks, what if you manufacture cosmetic products? Do you still get taxed for the utilities used and tools to manufacture and the supplies?
No, the supplies you would purchase for resale and not pay sales tax on it. The utilities you would purchase exempt from tax using actually what's called an exempt use certificate that you would give to the utility company to not charge you tax. But when you sell the cosmetics, cosmetics are tangible personal property. You would either charge sales tax on the cosmetics, or if you sell the cosmetics to Target, Target would give you a resale certificate and you would not charge Target sales tax. But when Target sold the cosmetics to my daughter, they would charge my daughter sales tax.
All right, Robert has a good question. He asks, how do you maintain the sales tax rate chart if you sell nationally online? And are there specialty accountants for e-commerce?
So the way you maintain a database of national sales tax rates, you have to buy it. A program that we use to keep tax rates, because they're always changing, is called Avalara. Avalara, I believe is how it's spelled. But you have to pay for it. there's no easy way. There's no national free database of sales tax rates. What was the second half of the question? I'm sorry.
There's specialty accountants for
Oh.
e-commerce.
We specialize in sales tax, which we deal a lot with e-commerce, but I don't know if there's accountants that just deal with e-commerce, which is in and of itself its own animal. So I don't know the answer to that question.
Willa's got another great question. Should a business have a separate bank account to deposit sales tax collected so that the money collected isn't subject to commingling and is available to pay when it's due? Or is it only done with larger businesses?
Actually, it's only done with smaller businesses that are irresponsible, that spend the sales tax money, that don't have it available to pay when they file their returns. If your company is responsible and not going to spend the money that it collected, then you don't need a separate bank account for it. But if the company is not run that way, then yes, absolutely set up a separate bank account. Maybe not just for sales tax, but for taxes that you deposit your sales tax, your payroll tax, and maybe your income tax estimates into before you send it to the government, so that money doesn't get used for other purposes.
And Deborah asks, when filing online, how do you file in each New York county?
It's a drop down menu. So you have a line and you drop down and say you put Suffolk in the first line, and then you fill it out, and then you go to the next line and you hit the drop down, arrow, and you select Nassau County, and you do Nassau County, and then you either do done or you do next, and you go to the third line and you do New York City and put in New York City, and you either do done or next. And it's really very straightforward for anyone, I'll say under the age of 70 who's used a computer. Something along those lines. It's not difficult to do as long as you do it. The problem is just forgetting to go to the website quarterly and log on and do your return. But it's drop down menus. Everybody should more or less be able to navigate that if you've grown up with a mouse in your hand.
Okay, Rinaldi has a question. If I sell a photograph online, like something for someone to buy and hang on their wall, should he charge sales tax? And is it subject to different sales tax on the county or state it's going to? And if he sells it to an interior designer to use for work with their work, would he charge the sales tax on that since they're having a reselling certificate?
So assuming the photograph or the painting that you're selling is tangible, you're shipping it to them either on a piece of paper or a piece of paper in a frame or fabric or whatever it might be. It's subject to sales tax based upon where it's delivered. You always need to charge everyone sales tax unless they're special. The way someone tells you that they're special is by giving you exemption documentation. So if the interior decorator designer thinks they're special, they need to give you a resale certificate. So, but being an interior decorator doesn't make them exempt. Giving you the resale certificate is what makes the transaction exempt from sales tax or a piece of paper.
Well, that seems to close out all of our questions. I believe Willa will be back on in a moment.
I'm here. Mark, this is just amazing. We could go on all day because it's just, we get these questions all the time and you're such a tremendous resource. So like if somebody's starting a business and they want to set this up, would you be a resource for helping them navigate this in the beginning? And how much would they expect to pay for a service like that? Or if
So yes, you would absolutely be a resource, and we charge $495 for a consultation.
Okay. Okay. I think everybody always wants to know that. So I'm kind of doing it for my own as an advisor. People wonder. I know that the state number, I've been told, I haven't actually called them, but of course they want your money. So they want you to collect the right amount of money. So I've heard that they're very helpful as well to get it kind of figured out. So if you're out there and you don't have the money to spend on someone like Mark, you could try the state. But if it were my business, I'd go to you, Mark, because it sounds like you know what you're talking about, and I'd feel really comfortable
And I don't disagree with what you just said, with the caveat that if you call the government and they say, do this, say to them, is there a memorandum or advisory opinion that you're relying on? Then they say yes, asking for the number. Look it
mhm.
up on the website, print it out. And if you're calling about, photography, whether that's taxable or not, and then you print out the memorandum and you read it, because please read it, and it talks about cotton candy, you probably can't rely on what they said to you because, but if they give you something that in writing that mirrors what they told you, then yes, you're not really relying on the verbal advice. You're relying on the written memorandum that they pointed you to.
That is I totally agree with that. Get it in writing and back it up with writing and put it in a folder so you have it if you ever have to fight the battle, I guess, when it comes. Well, this has been unbelievably wonderful. I'm so glad you came to talk to everyone. I hope everybody got a lot of value. After this closes out, everyone receives a survey. Please give us feedback. We want more of this in the future, and your feedback really helps us a lot. As Leslie had said, too, this is taped and will be on our website probably within 10 to 15 days. So you can view it in the future. I know myself, I sometimes have to watch it a couple times to absorb it. And thank you very much, everybody, for attending and for your time. And most of all to you, Mark, for donating your time to us today and our clients. And appreciate all the information that you gave today.
But thank you for having me.
Yeah.